Hi traders, it's Andrew, and I just want to show you another example of using patterns within patterns to find high probability trading opportunities. We're currently looking at a daily chart, and what we're going to do is we want to identify higher time frame key levels of support and resistance. So if we have a look at this big upswing from the very low to the very high, take our Fibonacci tool and just draw our lines up. We then take a horizontal support resistance line, we just move it down and see if we can find that horizontal support resistance lining up with a Fibonacci number. So we have nice confidence here. You can see prices retrace off the highs, hit the 38 level and reacted. So it's at these areas here that you want to look for potential patterns. Now prices already reacted off that level, but we can still use that area on the smaller time frames to look for a possible trade opportunity. Just have a look at this area on a smaller time frame on the 4-hour chart, for example. So there's the 4-hour chart. Look at the nice buying pressure coming off this area, and price starts to retrace. So if we draw a Fibonacci tool on this swing from the very low up to the very high, you can see price starts to retrace and then rallies. So if we look at adding our Fib tool onto this swing down, you can see we have an 886 level lining up with a 20 Fibonacci retracement number, which forms the actual bat pattern. So if you have a look at this area now, let's just have a look at this on an hourly chart. Just compress this. So that's the swing that we just saw on the 4-hour chart. Just going to get rid of this eclipse. So we have this buying pressure come off the daily chart, but then start to retrace, comes just short of the 50. You can see the retracement minimum 38%, just shy of the 50, and then we drop down. You see the nice confluence 886 and the 20. That forms the bullish bat. Now you could decide to trade the level right there with a stop loss below the low. You're looking at about 30 points of risk, which is not too bad. But let's just have a look at this area right here on a smaller time frame, and how you can use this concept to really fine-tune your entries. Now if we have a look at what's going on here, you can see we've rallied and then we start to retrace. So if we now, I'm going to move this out the way, if we now draw our Fibonacci tool on this swing from the low up to the high, you can see price retraces down to the 62 Fibonacci retracement number. It then starts to rally. So if we just get this in here, we have a nice little swing up. Remember, our bias is long. We have daily support as well as a 4-hour bullish bat pattern where price is currently trading. So what we're looking for is we're looking for a way to reduce our risk. And you can see price has rallied off that key area of support down here, started to retrace, find support at the 62, then it starts to rally again. Once it starts to rally, draw your Fibonacci tool in from the high down to that low. You can see price starts to retrace, and have a look at what we have setting up right here. We have, I'm going to move this line down, a bullish Gartley on the 5-minute chart, 79 with the 127 extension. So what we'll be looking for is a possible buy opportunity completing at this level, and the risk on the trade with a stop below the low would be about 11 pips. So you can see how we've actually reduced the risk by a third just by trading and looking for a smaller pattern on that 5-minute chart. So if we now put a limit order in, we want to put a buy limit at 56, and we will add, let's make it 59. 56, 59. We're going to add the spread in plus a pip, so it's 2 pips for the spread plus a pip above the level. So we're on 59, and let's just have a look. We may need a slightly bigger stop. Let's say 15. So I'm going to use a 15 pip stop now, just to put it just below the low, so slightly more than the 11, but still very small risk. And place that order and see what happens. Now in terms of take profits, let's just go back to this 4-hour chart. Remember, this is a 4-hour pattern, so we can definitely look for larger targets. And if you have a look at this area up here, it stands out really nicely. We have an area of support becoming resistance. Have a look there, resistance, back to resistance once again. So that area there looks pretty good, and that's about 100 pips away. So if we target 57.68, let's take a 1.5768 as a possible take profit level. We're risking 15 for a possible target of 100. So let's just go back to the 5-minute chart now and see what happens. So price moves down. Let's follow it along. So you can just redraw this ever so slightly. See, it makes a new high at the 62. So we're still looking at the same level to buy at. Okay, so we've now been filled on the long side. I'm just going to move this up to a 15-minute chart so it doesn't look so cramped. Buy entry was at 56.59. The stop loss just below the low, so 15 pips, and I'll take profit up towards the high. So let's see what happens. Price sits in its range. Now you need to be cautious about moving your stop to break even too soon on these sort of trades. Going nicely in our favor, 57 pips up at the moment. It's going to move to the hourly chart and see what happens. Okay, so price is now moving in our favor, and you can see we've now rallied up and hit resistance and been taken out on our trade. So just have a look at that. We've got taken out for 109 pips for a 15 pip risk. So really nice risk reward on the trade. And once again, we had a pattern. Just delete all this. We had a pattern within a pattern. So we had the big 4-hour bullish bat, and then a 5-minute bullish cartly form right at the completion area, giving us a very small risk on the trade and giving us opportunity to shoot for the bigger targets. So I hope you found that helpful.